Hello traders and welcome to our live trading video update on the smart money trade that we're currently up about nearly just under £2,000. It's still not up on here, founder of Master the Markets, Elite Traders Conference and the Traders Open Day. So traders, yes, we have been off the grid for quite some time. I mean the reason is because we were just restructuring the company to becoming more of a FCA regulated trading floor. So we are putting all that infrastructure together, and that is why we've been awake for quite some time, and other things also like had hit us as well. But here we are back again on the updates and for teaching you some really quality high material just based on price and true trading. Do always remember that we pride ourselves in being traders first and trainers second. So most of you will be asking yourselves, so how did we get to this figure here, just a little bit under £2,000? How do we catch this move? We got in at 131.42, as you can see where that green line is. Okay, it's basically the close of this primary, and this stop taking bar over here that you can see, which was a massive reversal bar, which you can actually see on the 4 hour as well. According to our trailing stop loss, we actually escaped that as well. We missed that as well. So that was good. We're still in the trade. But do remember, not all the time is going to be like that. But of course, it's a law of numbers. So let me explain to you how you critically catch turning points. Because you see, traders, this whole strategy that you're seeing over here, just under £2,000 over here, is what we call smart money. Okay, smart money 2.0. And in smart money 2.0, all we are looking to catch is the turning points. Okay, now you have to catch a turning point before it gets confirmed. All right, so let me show you the three types of turning points that can occur. Okay, so let's take a look over here, traders, right? On my other chart over here where we got all the indicators, the first thing that you need to have to quantify a turning point is, I think I've already given it away. I mean, the first thing that you need to have before you can decide where to enter before a turning point occurs is you need to quantify what a turning point is. I've talked very numerously a lot about this on all our YouTube channels and all our YouTube videos as well. So I would really highly recommend for you guys to go and take a look at that. And in all our workshops and conferences, we always talk about this very important work of quantification, because even traders who've been trading for 4 or 5 years don't even know how to do this. Now, traders, so in terms of this turning point, right? I mean, you first have to quantify. All I'm saying is that swing highs and swing lows are your turning points, yeah, just like here. Swing highs are where selling pressure comes in, and swing lows are where your buying pressure comes in. You got to identify and quantify when would you say enough buying pressure has come in that the low is confirmed as a swing low. Okay, and one person's quantification may be different to another. Then how do you know which is better than the other? That is when we talk about open equity. Now, open equity is a very large topic, and people in Traders Case Basecamp get to learn about this. But for now, I think I'll not dwell into that. Okay, so this is the two things you need to know: quantify your turning points. When will something be identified as a turning point, so that everybody in a classroom, when you teach it, will get the same answer. And also, how do you know which one is one better than the other? Is by the open equity. The turning points that we have, which is the smart money indicator, is basically one that we leverage off the institutional traders, okay, out of millions and millions of dollars that they have spent. All right, so that's how you know that this is better than the rest. We've done our research, and you can easily see as well. Okay, so what are the three ways that you can identify a turning point? Let me give you some three price criteria. Okay, three price criteria. Right, the three price criteria that we are looking at, let me just show you, traders, over here. The first thing that you can look at, yeah, the first thing that you can look at, first price criteria that you can look at is basically what we call a V1 pattern. So something is falling like this, right? Three bars falling, and then you look for some other criteria for it to then turn around. Okay, let me just redraw this a bit. So the first type of price action that you can be looking at is something falling like that. Okay, some price action falling like that, and then you look for some kind of price clue that buying pressure is coming up. Okay, wait for this price to go up and maybe close very near to its high or whatsoever, and then you can see that that could be a a price reversal coming, which could then lead up to more bars going up to give you a swing high confirmation, swing low confirmation, pardon me. Okay, that's the first price action that you can look at. Now, the second type of price action that you can look at, traders, is that price is coming down, okay, and it's closing below the low, so aggressive selling, and suddenly then you get a price where it turns and it closest near to its high. Okay, so buying pressure is signal. So you can see it's like a U pattern or a V pattern, whatever you may call it. Okay, so that's the second thing that we will be looking at. Now the third thing, traders, that you can be looking at, the third type of price action that you can be looking at, remember that to capture a turning point, especially if we are looking to go long over here, is we are looking for buying pressure to come up. Okay, so that's one, that's two, and number three, what we are really looking at over here is that we are looking for a third type of price action, which I'm just going to show you right now, where it falls and then price starts to consolidate in the terms of an insider bar, okay, an IB. Okay, so these are the three ways that you can see that a turning point is about to occur. Take a look at this. Of course, you must put more criteria into this, but this is the basic raw, okay, stuff. We talk more about this at Traders Basecamp, and you can ask all kinds of questions there as well. Right, so that's to do with the three types of turning points. The final thing what I do want to tell you, which is very, very important, so the three types of price actions for identifying turning points. And the final thing, most important measure, traders, is that now you see the swing low is confirmed, right? Now if you want to capture a swing high, all you have to do is wait for swing low to confirm, which it has done already right now, and you have to get in before the swing high is confirmed. Okay, these are two things you need to know. So this is very, very important. This is the first basic criteria for a swing trading. Okay, for swing trading, to capture the highest open equity as much as possible. Alright, traders, so that's all I wanted to just tell you in this video. Just basically that there's 3 points. That first, the 3 types of price action to identify the a turning point. The second thing, actually the first thing really, okay, the first thing that we really said is you must quantify, okay? You must quantify your turning point, okay? And then the second thing that we talked about is the 3 types of price action. And the third thing what I'm telling you is how to enter into a swing trading position, which is basically if it's in an uptrend, you must wait for swing high to confirm and must enter before swing low is confirmed. So in fact, where our live trading members are getting in, they will get in even before this arrow pops up, the swing low arrow pops up, but they will only look to get in into the 3 types of price action after this swing high has been confirmed, but before the swing low has been confirmed for an uptrend. Okay, so that is what we are looking for. Okay, confirmation. So swings confirmations is what we are looking for swing trading. Okay, so these are the 3 things that we covered. So do think about all of this, and this will be highly, highly important for boosting your trading performance to the next level. And as we always say, till the next time, traders, stay disciplined, follow your trading plan, and keep trading like a master.